the United States is signaling a very strong signal that they're going to be buying Bitcoin here at some point. And it's, we've got people in the administration who understand it. I don't know how well Trump understands it. That's kind of beside the point. But Senator Lummis understands it. Bessent understands it. Lutnick understands it. Like, these guys get it. They understand what this is and how important it can be. And so we were talking about before, the Bitcoin bonds. Yeah, that could be a very important way for us to monetize this new asset for the United States and stabilize a Treasury market that could get unruly here if we continue down this path of money printing to save the Treasury market over and over and over again. And now we're bumping up against some serious resistance, and we've got to kind of break through that mentally and hold that for this to stand. But I think that Bitcoin's catching a wave that similar to gold, where you've got investors who are putting money in both gold and Bitcoin.
James Lavish jumps right into the thick of the financial crisis. He cautions that what we are witnessing right now is not merely volatility, but rather the precursors of something much more frightening, a market that is so overworked and reliant on debt that even a small shock might lead to a full-blown financial disaster is the terrifying image that Lavish presents. According to him, central banks will be forced to step in once more and inject even more liquidity into the system. However, the remedy may turn out to be worse than the disease because inflation is still present. We might be poised to undergo a monetary reset that would completely reinterpret our understanding of finance if he is correct. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
If the stock market blows up, really blows up, we are headed for a deep recession. And the only way we can pull out of that is by printing more money. So what happens to bond yields? Bond yields will go up in that scenario, because their bonds are going to, the bond traders, the vigilantes, are going to want to be compensated for the clear and obvious inflation that's going to come from another expansion of the money supply. And so that's the issue here. So do bond yields go down to 2% because we just slowly grind into a recession here? Or do they spike up to 5-6% because we have blown up the economy and the Fed's turning around and printing money to oblivion to save it? It's a good question. And that's why you're seeing a lot of uncertainty in the market. People don't know where we are on that spectrum. And some of it has to do with, headlines and a tweet, from Trump. He could just tweet something that just spooks the market to the point where, you have the NASDAQ sell off 3 or 4%. Oh, well, look at that. It's down 2.5% today. It was down over 3% earlier, I believe. But here's the telling thing. The telling thing is that bonds are not acting like they should as a flight to safety. That's number one. And number two, gold is absolutely ripping higher, rocketing higher, because it is a flight to safety. And investors are looking for a place to put money to just protect it. And gold has been a strong store of value for centuries. And now we get to the question about Bitcoin. And Bitcoin diverging today is very interesting. It's interesting because is it following gold? Is it finally, are people just realizing, like you said, that arbitrage, is that closing, that understanding arbitrage? Is it just because the dollar is so weak, which means that the dollar Bitcoin price goes up? That's part of it. So I think it's a combination of things, Marty. First of all, I think, unless we get another meltdown of the market where everything correlates to one, and that's just reality. The only thing that may not go down in that case is gold, but I think that even gold would, because when everything correlates to one, it means that you're getting margin calls everywhere, and you sell what you can, not what you want to, and so everything ends up going down because you have to get cash to meet margin calls because everybody's levered. So in that case, Bitcoin will go down. But as it stands here today, it appears we've hit a local bottom in Bitcoin down at the $75,000 range, and we've recovered from that, and now we're bumping up against some serious resistance at the $88,000-$90,000 level, and we've got to kind of break through that mentally and hold that for this to stand. But I think that Bitcoin's catching a wave that similar to gold, where you've got investors who are putting money in both gold and Bitcoin, and that the U.S. dollar being weaker is making Bitcoin stronger as well. And so it's a long way of saying that the decoupling, I appreciate it, I like it, I want to see it continue, and we're gonna have to see weeks and months of this for it to really hold. But it's that information understanding arbitrage you were talking about, and that's really what's going to drive this long term. And that's going to make people understand that Bitcoin is something that should be allocated separate to every other asset class out there. The smart investors start reallocating money out of bonds and into Bitcoin, and then that's it. That's like Bitcoin will gain so many assets. Like it will be the total market value could double, very rapidly. Now I still believe that's a little bit of ways off because of what you said in your tweet earlier, your post earlier, which is there's an understanding arbitrage, there's an information arbitrage. People are not getting it yet. But when they do, and it does decouple completely and it starts acting a lot more like gold does, but it's gold on rocket fuel because it's in its adoption phase. And of course it's going to have its volatility because any asset in adoption phase is going to have a volatility. But volatility to the upside, of course, you and I have talked about this both before, it's a gift. A volatility is actually attractive in a rising asset because it gives you the opportunity to dollar cost average in or find spots that if you're a savvy investor, to find spots to add extra capital during those super volatile periods. So I believe that's the key though. When you start seeing investors reallocate out of bond portfolios or out of their bond allocation into Bitcoin, man, that's it. That's going to be that to me is where that's really that's the pool that once Bitcoin starts drawing from. It's a $330 trillion pool. Once Bitcoin starts drawing from that, lights out, game over, watch out. I would not be short this thing.
According to James Lavish, the United States may be preparing to issue Bitcoin-backed bonds, a daring move that would formally introduce Bitcoin into the national economy and aid in stabilizing the Treasury market. If the Federal Reserve continues to inject liquidity into the system, this concept becomes even more crucial. Traditional bonds simply aren't delivering anymore, and investors and pension funds are having a hard time finding assets that can keep up with the rising rate of inflation. Additionally, Lavish notes that although trade disputes and tariffs make the news, several nations are quietly considering Bitcoin as a matter of financial independence and national security. Since the global hash rate has increased significantly, many of which aren't coming from miners who are publicly registered, it's possible that some of them are already mining and hoarding Bitcoin secretly. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
So it's very interesting. And that's it, the game theory. And that goes back to, the United States is signaling a very strong signal that they're going to be buying Bitcoin here at some point. And it's, we've got people in the administration who understand it. I don't know how well Trump understands it. That's kind of beside the point. But Senator Lummis understands it. Bessent understands it. Lutnick understands it. Like, these guys get it. They understand what this is and how important it can be. And so we were talking about before the Bitcoin bonds. Yeah, that could be a very important way for us to monetize this new asset for the United States and stabilize a treasury market that could get unruly here if we continue down this path of money printing to save the treasury market over and over and over again. And so treasury traders, investors are going to demand, they're going to need a higher return. Pension funds can't meet their obligations unless they have a return that's matching inflation or better. So that becomes a big challenge for them. So the point is that other nations they're not asleep at the switch here. They're watching this. There's a lot of confusion, a lot of noise about the tariffs and all that stuff, but they're listening to what the United States is doing. They're watching this. They're saying, man, if they corner this Bitcoin market, and it really does continue to be nation state level resistant because of the amount of energy it would take to, create a fork or whatever, then they have no choice. That's the game theory right there. But to just start doing anything they can to accumulate themselves now. And I believe that has begun. I don't know how how large, like how widespread that is. We could just have a couple very large nation states doing it, and that's why hash rate is screaming higher. But it's not the public miners that are doing it. They're not out there pushing hash rate up like this. It just doesn't make sense.
The core of James Lavish's argument has been reached. Game theory is currently being applied globally, with Bitcoin at its core. He thinks the US is subtly indicating that it would consider adopting Bitcoin nationally in the near future, possibly even issuing bonds backed by the cryptocurrency. This would be a calculated step to stabilize the Treasury market and provide the United States a competitive advantage in the new digital financial era, not just a financial innovation. Assets that can outperform conventional bonds are in high demand by investors and pension funds due to growing inflation and pressure on returns. Perhaps Bitcoin will be their only practical choice. However, Lavish cautions that everyone is watching. Other countries are paying close attention to what the United States is doing with Bitcoin, while the public is preoccupied with political noise and tariffs. Other nations may feel compelled to follow if America starts hoarding Bitcoin or using sovereign bonds to monetize it. According to game theory, the other big players can't afford to remain motionless once one of them makes a move. According to Lavish, the sudden spike in the global hash rate, which isn't being driven by open mining businesses, suggests that certain nations may already be covertly mining and hoarding Bitcoin. According to Lavish, a new era has begun. After opposing Bitcoin, the establishment is suddenly starting to embrace the movement. Nation-states, banks, and individual investors will be the ones best positioned in the coming years if they can identify the changes in the financial system early on. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.